Startup tax holiday. With a view to provide an impetus to startups and facilitate their growth in the initial phase of their business, a deduction of 100% of the profits and gains derived by an eligible startup from an eligible business is allowed for 3 consecutive years out of the first 10 years. In continuation to our startup series, we would now look at the tax holiday provided to recognize startups under Section 80 IAC of the Income Tax Act, 1961, and the conditions to be satisfied to claim the same in number 2 of the series. Tax holiday and conditions specified. Whether assessee is eligible startup. Whether engaged in eligible business. Whether all other the conditions are satisfied. 100% deduction allowed on profits and gains from eligible business for 3 consecutive years out of first 10 years at the choice of the assessee, under Section 80 IAC. Eligible startup should be a private company or an LLP incorporated between the 1st of April 2016 and the 31st of March 2022. Partnership firm is not an eligible startup. Turnover should not exceed Rs. 100 crores in the year in which deduction is claimed. Application in Form 1 should be filed with Interministerial Board of Certification, IMB, and Certificate of Eligible Business should be issued by IMB. Eligible business. Business carried out by an eligible startup engaged in innovation, development, or improvement of products, or processes, or services, or a scalable business model with a high potential of employment generation or wealth creation. Other conditions. Plant and machinery. Entity should not be formed by transfer of plant and machinery, pandem, which was previously used for any purpose. The condition would be deemed to have been satisfied in the following cases. In case such pandem is used outside India by some other entity and was not at any time used in India, and such pandem is imported into India and depreciation was not earlier allowed on such pandem. If the total value of old pandem transfer does not exceed 20% of total value of all the pandem used in such new business. Reconstruction of business. Entity is not formed by splitting up or reconstructing a business already in existence. However, if the startup is formed as a result of reconstruction or revival of business affected due to flood or riot, etc., the deduction under Section 80 IAC shall be available. Computation of deduction. Deduction under Section 80 IAC should be computed assuming that the eligible business were the only source of income of the assessee. Tax audit. Books of accounts should be audited and the audit report should be submitted along with the return of income in Form 10 CCB. Deduction not allowed under other section. Where any amount of income is claimed as deduction under Section 80 IAC, then deduction to such extent shall not be allowed under any other provisions. Illustration of deduction under normal vs concessional tax regime. Refer the below tables for 2 situations where concessional tax rate under Section 115 BAA is opted or if not opted. There is no exemption on MAT to an entity claiming 80 IAC benefit. However, the entity is entitled to claim credit of MAT paid over and above the normal tax liability in the subsequent years. The MAT credit can be carried forward and utilized for a period of 15 years, subject to conditions specified in Section 115 JAA of the Income Tax Act. Company shall not be eligible to claim deduction under Section 80 IAC since it has opted for concessional tax regime under Section 115 BAA. Tax rates applicable to companies and LLPs. Refer the below table for rates. At subject to satisfaction of conditions prescribed. A company which is opting for concessional tax rate under Section 115 BAA, 115 BAB of the Income Tax Act, 1961 shall not be eligible to claim startup tax holiday.